Wow, wow, wow. You're welcome. My name is Mida Jimo. You're welcome to this episode, Why You Need Plan B Express Scanners. Now, many have been complaining to me, I can't trade, I don't know how to trade because of technical analysis and all of that. Okay, no problem. Or let's just say why you need automation. There's something you need to understand when we talk about automation. The automation are in two ways. Okay? Automation are two major ways. And we're having a very serious training coming up on Thursday, Friday, Saturday, or depending on where you are watching and listening to this um, training. Now, why is trading so bothersome to a lot of people? It starts from our level of indiscipline. And it's again joined with our expectation. We have so much expectation, and you discover that with so much expectation, just pretend as if those things were not there. As long as they are in your mind, I can tell you your trading is going to be very terrible. You're going to be having wrong judgment about the market. You're going to be doing a lot of bad things in the market, which are not to ought to be. So trading is not troublesome. It's not a burden, but there's a way we go about it to become a burden. Now, I know a lot of people complain, okay, I don't know how to do technical analysis. Well, the truth of the matter is that technical analysis is not difficult, but obeying certain rules is one of the most difficult aspects as a trader. So let me now show you step by step. We have fantastic different scanners that you can subscribe to. But if you're a member of Plan B Express Cash Flow Solution Club, at least you have one free. And so you can request for others. Now, the good side of it is that if you're already a member of Plan B Express Cash Flow Solution Club, it's only yearly membership. If you have a yearly membership of Plan B Express Cash Flow Solution Club and you want to subscribe for other ones, because once you come in, one is given to you free. One, what I mean by one, they appeared. They appeared. All right. So one is given to you free. Maybe by chance we'll give you two, but it's one normally. Okay. So now, once you have access to this, you should be able to trade if you can follow simple instruction because we give you a PDF or Word document to obey those rules that are stated there, and then you follow it. And of course, following us in our mentorship class or group, you can follow and learn some of those things, the basic things that you must keep in check. Now, most people who are on the forum, then we have started 90 days challenge on the 1st of the January 2026. And then like the time I'm talking now, today is 26th of January 2026. And so anyone who had been on the group and following bad by bad of all of those training will have been able to attain a particular level of difference that, oh, have now understood this. But by and large, no strategy or tools or scanner work independently. You must have basic understanding of the market. So please pay attention. It's very important. How do I maximize any of those scanner? Either you buy one or buy two. Because if you're a subscribe member, yearly subscribe member, right, you will have access to maybe anyone that appeals to you at a discount price. Yes. So at a discounted price. So let's say yearly membership of PBS Club is $150, for instance. If you are buying the scanner independently, you are paying $200, for instance. So now, if you bought a scanner, the first one, and you want to now just add other series subset of it, then instead of $200, you're only going to pay, I think, $100 or something. We'll check. I'll check. So then, but people who are members of Plan B Express Cash Flow Solution Club, you already have one. All right. The moment you sign up. And then, so if you want to add more, then you can get it at $50. Huh? Are you ready? Yes, at $50. Yes, because that's part of your benefit being a member. Okay. So once you buy, you want to get it, then why not? You can subscribe. I think it's $50, $70. I'll check. But if you want to get additional one, so let's quickly go. Now, this is the genesis of even maximizing trade. I mean, this is the genesis of being productive in your trading. The genesis is understanding the market itself and, of course, identify in a plain chart. So let me clear off all this jargon that you are seeing on my chart. Let's quickly go there. Now, I'm going to clear off this. So I've cleared off everything. I want to have a very plain chart. So this is my plain chart on gold, right? So if I go on daily time frame, very simple. Now, what I'm going to do on daily time frame, of course, I'm not teaching you comprehensive what you need to do, what you need to check out for the market, as it were, right? So that we have a training for that in our group, so you want to get that. Now, so when I come to the market, the first thing is that I need to understand the structural bias of the market. I need to have an idea of is the market going up or down? And if you cannot get it at a glance, then there's no need. Looking at this now, you know that it's an uptrend. So probably I want to do one or two basic things to know how the market has been doing. The first thing I'm going to do, so if you're a day trader, a scalper, and all of that, you have no business, especially when you are trading gold, you have no business with weekly time frame and all of that. I'm sorry, you have no business. When you are a swing trader, but a scalper, a day trader, and you are going to daily. In fact, some people go to monthly, and you're a scalper. No, now it's a waste of time. That's the truth. So just get it right. If you are a complete, a kind of swing trader, you understand? You're trading swing and all of that, doing more full activities, then you are going to need to go on those higher time frames. So our knowledge here again is that higher time frame is relative. Okay, most people say I want to go on higher time frame. And I say, what do you trade? Are you a scalper? Okay, if you're a scalper who's scalping 1 minute, how can daily time frame be your higher time frame? Your higher time frame, man, is about from 5 minutes, 15 minutes, your higher time frame. So just get to understanding what define your higher time frame. What define your higher time frame is what time frame do you trade? What type of trader are you? Are you a scalper? Or you are a day trader? Or you are intraday? Or you are a swing trader? Stuff like that you need to understand. So let's quickly go. Now, if I want to look at this market now, there are a few things I want to look at. I saw where the market broke structure here. That's what it means. That means there was a break of structure here. This doesn't might matter to me, but I just want to take a reference point. So if this is a break of structure, there was a place that that structure was broken. Now, this is supposed to be what we call an inducement to an extent because after when the market break, okay. Now, if that's an inducement, but sometimes market get there and take a bounce. So if that's an inducement, then the real order block is this, okay. Now, so when you go to a lower time frame, you probably may be using more of order flow because it's a comprehensive compilation. So, but this is like an inducement, all right? That's liquidity, where this market is supposed to come down and take it and then bounce to this place. That make a very whole lot of sense because now you can see that we have a fair value gap somewhere here. Make a lot of sense. Now, the next you're going to go, you see another break of structure, right? Normal major break of structure somewhere here. So if that is a break of structure, so you have this as another block, right? All right. So you can even have all of them as another flow. Can you see something? Very, very simple, right? Good. Now, so that means you were expecting that this market is supposed to come down and mitigate all of this point. Now, today you come into the market, look at where the market is excessively bullish, perpetually 1, 2, 3, 4, 5, 6 bullish, no returning back. So I'm going to step down to 4 hours. This is what we now call top-down analysis. Are you following now? So I've stepped down to 4 hours so that to be able to see where I can catch the market. Do you get it now? So that means all of these points, no problem. They are there. Probably they were not mitigated. So now I'm going to go sequentially, though I shouldn't bother so much about this, but I just want to show you how the market arrived where it is right now. So that means this is a break of structure. If this is a break of structure, that means where we call the point of origin, which is like demand zones or other block and all of that is here. So you expect the market, since it's bullish that broken a structure, you expect the market to come down and mitigate this play. It never did. Are you following? It never did. The market just continued to do what it wanted to do. Instead, it roll up and roll up and roll up and roll up and start moving down here. So you didn't have any break of structure here. People can call it now maybe marking this point. But now we have another what is called demand zone here. Now, why is this place a demand zone? Let me quickly explain to you. The market was choppy, doing sluggishly and all of that until we have aggressive movement and involvement of the market maker. So this become a what? a demand zone. So at that point, you are looking that this market is supposed to come down to this point. Factor that may make this market not to come down to this point is because of that demand zone. Are you following? Fantastic. So, and at that point, when this market come here, you come down to lower time frame to actually find an entry. Now, let's quickly move forward. Moving forward, we have up to this point. This is another break of structure. I hope somebody is just following. This is a structural break. If this is a structural break, now this had been mitigated. Then you look at many places here. So you can look at another demand zone, okay, here, that you expect the market to come back and mitigate. Are we together, please? Yeah, fantastic. So the market refused to come and mitigate this point. It's not a problem. Then you have another break of structure somewhere here. Can you see that? Makes sense, right? Yes. That's a break of structure, okay? Just follow me, please. Now that's a break of structure. So if the structure was broken here, that means there's another block, an opposing candle. All right. So I know many will confuse what another block and what a demand zone. What's the difference? So I'm not here to explain that. If you want to know more, then by the time you subscribe to our group, or you can follow some of my videos that I've done before, then you are able to see the difference between another block. And so basically another block is an opposing candle against the move of that market. All right, so if the market is bullish, the last opposing candle before the next move, okay? If the market is bearish, the last opposing candle before the continuation of the bearish. Of course, there must be a break of structure for you to confirm that. Now, this is another block. Now, there's a break of structure. Now, another thing you must take into account is the fact that this market, now having seen this other block, now that means what you're going to have, we always say that for another block to be valid, there should be preceding an imbalance, which has to do with like fair value gap. So that means aggressive move away from there. Even though too, demand zone have an imbalance preceding it. But the difference between a demand zone is that any area, market is not actually live, maybe it's going sideways or choppy or something like that, and all of a sudden you have a power move. So from that power move, that candle that created that power move, the last candle that the market was struggling is called demand zone if you are going bullish. Then if it's bearish, that's supply zone. Okay, now so I just cheaply explained this now so we have this. Did the market actually mitigated this? I don't think so. It did not. Now, so we're still just going to take this because we had a gap. So we had a gap here. So if you take it down here, so you can see we had a gap here. So, okay, let me just take off this now. Now we had a gap here and the market run up massively and all of that. Here we are. So what am I going to do? So can I buy or sell now? So I'll have to step down to 1 hour. Now, 1 hour is to refine furthermore to see possible area, even though I know I'm bullish, but you can still find a selling opportunity sometime, which is a counter trend anyway. Now, if you look at this now, so that's on 1 hour time frame. I'm just going to work with this one as a break of structure. Can you see that? Into that gap. So this is a break of structure. So that means if that's a break of structure, you see this last opposing candle, that will become my order block. Can you see that? So that's my order block there. 1 hour order block unmitigated. So probably I'm not going to be marking or giving title to these things. I normally title so that when I come there. So market move aggressively up. You expect the market to crash down. Market never did that. So we have another point here. This is a high. Can you see that now? So this is a high. So this high now, there is a challenge here. There's a challenge here. The challenge here is that this high, can you see this high was not broken or has not been broken. So let's use that language. Because if you say was the market is still within that region, has not been broken on 1 hour time frame. But it's as if we swept liquidity over there and then we're having reaction of the market to be coming down. So that means if this market will come down, this is on 1 hour time frame. That means we have a point of interest here, which is a demand zone that the market will come down to. But can you see something? The market has actually mitigated that point, if I'm not mistaken. All right. So it has mitigated that point. So that means the point of this market, all right, taking to this here, let me just close one market. So that means the markets will be selling. Okay, so the market should be selling. I haven't gotten this. So are you seeing something very importantly? So that means I could look at this point, yes, because this market, and just mark this place as a support. So, but remember, we have an unmitigated area here, but this market is bullish, so the market could travel down here. So that means I should be looking for a counter sell. But can I just sell like that? No. This is sweep of liquidity, so probably the market. So now let's quickly go. We move to 30 minutes. So 30 minutes to an extent may just create almost similar thing as it were. So 30 minutes want to claim that the market got actually broke. But we have a high here, which is like a massive sweep of liquidity as it were. So let me go to 15 minutes. That's how I roll my own. So some can go to 2 hours and all of that. I really know that I do not have so much of energy to do all of those things. So now let's quickly go to that 15-minute time frame. All right. Remember, we mark here and we said, so this is valid, and then the market has not mitigated it. Now, so 15 minutes, you can have these two. Now, that means these have been mitigated. All right. So because this can form a structure, so just like minor kind of a thing. So let's go this way. We have this. All right. Supposed to be taking trade now because I think it's London high to sell down. And then, so, we have marked this place as a support. All right. So now look at it. So the market has traveled, as it were. So having here of the market. So here we have another break of structure. So if we have a break of structure here on 15 minutes, which is here, this is a break of structure. All of these ones over all to one here. So that means you're looking at here. This has been mitigated here. All of them have been mitigated, if I'm not mistaken. Because if you look at this, a market return back to it. So it has been mitigated. Here has been mitigated. So that means this market need to sell down. That's what it means. So now I go to 5 minutes. This is the lovely thing. So this is what we call top-down analysis. Now, when you do that, so even when you are using a tool, you are going to enjoy it. And that's one of the things you enjoy when you subscribe for our scanner. Because I'm going to teach you basic thing about the market structure itself. So let's look at internal structure. So the market actually broke down to this point on 5 minutes, looking at the internal structure. So that means we actually broke here and returned back up here. Then you see that. And then we have a break of, that's the market structure shift here. Then we have a break of structure down here. So after this break of structure, you have another internal structural break, which didn't come back here. So that means we have this. So if we have this here, internal structure here, so these are very detailed kind of a thing when you are doing your market analysis. So we have low here, then we have high, and then a low here. So that means this low give birth to this. So we have a shift. So this is a shift, and the market return back to this point. So if that's the case, after the shift, market return back to this point. This is another internal structure. So this is an internal structure. You get this internal structure. Can you see that? And that means this point here is another block, but I think it was mitigated, if I'm not mistaken. Look at it. Yet it was immediately mitigated because this is it, and then come back to it. So here we have a already mitigated other block. So if this is already mitigated, so what I can have is to have a level of support down here on 5 minutes. So what you are now watching is that if this market come back here, break this, then you are looking at sweeping this liquidity and return back to this point. If all things being equal, you understand? So that means you have areas you are paying attention to this market to return back to, as it were. So here you have this liquidity, then you have this support. So by now you will have sold. Now, this what I've just shown to you. We now come to what we call, after done the market analysis, we call what we call entry confirmation. Now, I use one of the most powerful entry confirmation called the power of three. Now, which means the power of three is accumulation, manipulation, and distribution. Now, as the market was doing, now this is the highest, all right? The market returned back, this is a break of structure, and then we create this highest, and then market return back to the region. So that means this is a low. Then we create a high, Now, this high now, this is a lower to this. So we're looking at if we break this, that will become a market structure shift again. Yeah, somebody may want to take this internal again as part of it, say, hey, you have something like this, but I don't think this actually came up. Oh, I think it's higher. Okay, so let's just work with this so I won't complicate issues for you. So that means you are looking at this low for the market to take it or reject it and bounce back out from that. Now, this is where the aspect of our scanner comes in. So many persons can still do this and will not find a place to enter the market. Okay? It is very, very important that you know that you are finding a market here. Then you need to know the entry confirmation of that same market is crucial. It's so important. It's so important, ladies and gentlemen. So now let's go quickly. Now, so if I now come, I use my tool. Look at what will have happened. We use what we call PBX sniper tool. Look at it. Now, PBX sniper tool have given you a cell here, right? PBX sniper tool have given you a cell here, but I may not really, okay, I will have sold, right? This is a high, this is accumulation, this manipulation and distribution. What does it mean? Let these two candle, the one at the left and the one at the right, be lower than this since I want to sell. Then that means after this candle was yourself. But that was a more aggressive one that you cannot actually decide to take into. So I will have to wait for the market to reverse. So this reversal was actually myself. Now, this is not, I use my power of three for confirmation. Definitely all of this will not be my confirmation. This probably, no, this is not my confirmation. All right. So this is my confirmation. Let me stretch forth the candle for you to see, right? This is my confirmation. None of these are equal high. All right, so this equal high, so even warrant the market to come back to sweep the liquidity and then travel down. So this is my confirmation entry. Now, if I go down to 3 minutes, I could find an entry faster. All right, I could find an entry faster, but the best out of it. But if I have done all of this and then going to my 1 minute will be a little bit very fantastic for me. Can you see that? So going to my 1 minute will have given me a practical entry. So look at this now. So have you seen what we have done? Very simple. Now you're taking it from low, from high to low, and then so whatever thing you are doing here, you have an idea that this market is actually still bullish, and we have different areas when it come back to you stretch further into a higher time frame so that you are not lost into the lower time frame. But even before then, gold is a very powerful tool that creates opportunity for you to buy and make money before anything. Now, if you look at this part of 3 on 1 minute, that's a very lovely one. Yeah. So you will have traded, but you wouldn't know what to do because it turned to scalping, right? Look at this. Fantastic, fantastic. And I'll show you something. Now, this is what? Fantastic. So if you lose, you lose, right? So understand that. Now, definitely you are going to enter this trade, but let me now show you what will make me not to have entered it. Let's look at it. We have a fair value gap here. So that means you will have entered it because considering the conventional activities and the hybrid system called the ICT concept. So this will have made you to find an entry here. And this is a powerful power three. Now, let me now show you the psychological level that we're going to create a massive entry opportunity. So let's go to our scanner or indicator and look for PBX. All right, PBX 50 and 100 pips level. So we add it. Now you are going to edit part of it. This is a subscribe. If you don't subscribe, you can't have access to this. Now, so let's go. Now, here, you do little setting. You change this one to black, right? Look at it and change this one to 3. So you can see the way the trade is going now. Powerful. So then this one, what do? You change it to blue and then make it to be 2. Okay, so sometimes you may not even use this one because that's one of the things that confuse a lot of people so that you can see your stuff as much as possible. Then this one too, no need. Okay, so can you see that? So then I want to use like 30. I just want to have more so that I will be able to train within the period I'm supposed to trail. All right. So once you are done with that, there's no too much English. You don't need any too much analysis there. Now, this is lovely. Can you see something? Oh my word. Oh my word. Oh my word. So it has helped you to simplify system. Now, this is the thing we do. Now, the market is crazily volatile, but you will have traded as much as possible. These are scanner. We use this powerful scanner to make money and no story, no stress, and all of that. So look at it. Now, look at what I marked here. I told you, I said there's a fair value gap here. So that was what the market actually returned to, right? And then tap into it. After the fair value gap was tapped into, and it happens that it align with the what? The 100 pips, that's the secondaries. So the sub, we have major and minor. So this is a major and minor. So this is a minor psychological level, which we call PBS level. So PBS level, from here to this point is 100 pips. From here to this point is 100 pips. Our rule in this scanner is that when you take any trade, the first target is your 50 pips. And anything above 50 pips, because from one psychological level to another, you can be good. So now that means if you look at this trade, when the market come here, now some wait for a better confirmation. Felix, once the manipulation happen and it closes, that means my entry is going to be here. Now, I will teach you different thing on how to trade a market that you take from fair value gap. But so working with this scanner now, so that means your stop loss is below here. That's about 47 pips. That's not a bad one. Now, your first target of profit is going to be this psychological level, which about 69 pips or so. That make a lot of sense. Then the second take profit is going to be probably here, that we have what we call sub-minor, which is 50. So then the next will be here. So that means this trade, if eventually catch up with this, that's going to be 160 pips, right? So you can see the same gold is a buy and selling kind of opportunity. But when you are trading with gold, I always advise people stay with gold for that period until you are done making the money you are looking for on gold. Then you go to other instrument and then don't manage gold with other instrument at the same time. So here, the first day profit is done. Now, if you are not too sure of the market, just exit because maybe this market still need to go down. But in the process, you are making a lot of money. Now, let me quickly now show you all of those canals. Can you see now? Very, very fantastic when we use all of these things to trade. Now, let me show you. We have this. Okay. This is what we call, this has to do with PBX sniper calls with PBX trend call. Now, so you can see this one is going to help you to draw trend line, give you order block and demand zone, and then it can even label. So I'm the one that removed the label. Let me just put the label back. You're going to see, let's go here. All right, so if I put the label back, panel label, okay, you can see change of character, change of character. So I don't want it to confuse a lot of people because by the time they are seeing it, they'll start saying, oh, this is a change of character because what they know about change of character. Because gold has no respect for you. He does what he wants to do and then all of that. So you can see the market. This is scanner, all right, in combination and all of that. Then we have another one, massive, fantastic, right? Look at this. This is the mid deal. So now, if you're trading and you do not have the psychological level, sometimes you may not take profit where you're supposed to take profit. Now, this is 5 minute time frame. Can you see something? Now, this 5 minute time frame, the market has come down here. It hit exactly on top of the psychological level. Can you see that? Exactly on top of psychological level. But if you look at it again too, as if we have a fair value gap here in between here, but it has been mitigated by this candle. Okay, fantastic. Now, so let's go. Go to 3 minutes. You are going to find this trade earlier, right? Look at it. Look at the pin bar. And then the markets, oh my goodness. I just love all what we do here. I just love it because this is a very fantastic one. If you are in our ecosystem and you are not maximizing this, that's so painful. Seriously, then you have this as the market move. Then we have in 1 minute. So you can see that signal on 1 minute. See, very powerful. You are looking for 50, 100 pips. I don't think you need to, but what I told people is that you must first of all look at the higher time frame. All right, where's the market going to? Maybe on what? So daily is good overall. Then 4 hours and 1 hour to see the trend properly and look at that. So now look at it. So by the time you get here, you have already done 69 pips or 70 pips. Now, when you get out of this point, that is because you wait for this. Now, when you get out of this point to the middle, which is the sub-minor, will have done 110 pips or 120 pips. And then finally to this point, then you are in money. Then if you continue break above it, look at it the last, oh my God, oh my God. So by the time he gave you these signals too, you are even happy because this is a rejection at the psychological level, rejection at the psychological level. So while you're waiting because you want to find power of three, this is a accumulation, this manipulation and distribution. So when this candle close, exactly look at it, an engulfing candle. This is like change in state of delivery. That's a crazy one. Then you are entering the market here and look at it. Very fantastic. At that point, you have here. And then your stop loss, of course, is going to be above the psychological level. That's 70 something pips. Now, your first take profit, we say 50, but because your whatever is so massive, because this market was aggressive, not if you are not trading this consistently, you definitely will not catch up with this signal. That's the truth. And then the market see after delivering massively, what did he do again? He give you another entry. Look at it. This accumulation, this manipulation. So let's say you are the type that wait for the third candle to finish it, and then that means your entry will have been here. Now, this is more reason why I tell people to settle down and watch the game, how it plays out. So here, now, okay, it's not too close. Because if it's too close, I love to take my stop loss below here, but it's not too close. I can just put it here. That's about 56 pips. And then the first target point was supposed to be middle here. But since the market was so aggressive, look at it, 130 pips, it done, clear and go. Now, what I teach more is that what I call swing points. So look at accumulation, manipulation, distribution. You can find a small stop here, a buy here, and all of that. But if you want to work strictly by your tool, and I think it's good for as a beginner, work strictly by your tool. When they give it to you, you are checking it to pick an entry so that you will not claim to know too much, as it were. So by that time, you are taking money and then you are progressing with rest of mind and all that. So another scanner is this. So which with every of this scanner, you can use it along with the PBS sniper calls. You can see this one now. See the PBS sniper call on 5 minutes. This is on SMC, Smart Money Concept, where you have to look at order block, fair value gap. So this one label all of those things for you, even market structure, as it were, or price action. You have the break of structure, you have change of character and all of that. So if I go to 3 minutes, you're going to can you see that? So these are fantastic things. So you are looking at it now. Probably if gold get to this other block, I think it should be bullish because it may break it but this is a fair value gap. Is aligning with it now. Look at it. On top of this fair value gap was when the signal was given, and then you'll be fantastically happy to take it. All right. So, but all you'll do, even if you don't have psychological level on this, so that not to confuse yourself so much, you want to look at after taking the trade, you want to target 50 pips as your first take profit. And then that's going to be very, very lovely for you. You can see that. Look at it here. And then targeting 50 pips, 100 pips, and all the like. So that's scanners for you. Then we have another one. This is has to do with auto fix or Fibonacci retracement. Okay. So, and still combined with SMC. Now, so PBX sniper call down, give you the signal, and then you work with the parameter of like looking at the what's it called, Fibonacci retracement, and this one too still give you the markets we are. So if it's London session, New York session, it's telling you right now we're in London session. If no session, you say dead zone and all of that. So look at the market. This is a fair value gap, so that's why you see it's dribbling and struggling there, and then so it could get rejected and then continue to sell down as it were. Do you understand? So that's one of the things, and all of those scanners that we use are powerful, and then you can make a whole lot of money. Then the last has to do with the sniper core along with what? Along with demand and supply zone. So if you don't know how to plot them, then you can get this tool. Will help you to just look at it to tell you this is supply, this is supply. And one of the cheapest code of this now, the more supply, the more strength for the selling that will happen. So you now know that, okay, this demand zone. So the market, when it come back here, so we have a takedown, a reversal, and then back to this point, and then look up for the sell. I think of recent, what now happened, it created what? So that is like market structure shift. Okay. That is like market structure shift. So for that, after the shift, what you expect is that the markets will come to other block or probably come back to the supply zone. So whichever one the market decide to do. So if I mark this point now, let's look at it quickly. And then I said the markets will come back to this point, right? So I could go to 1 minute All right, okay, or 5 minutes, because this is 15 minutes. This is currency, Euro USD. So I'll go to 5 minutes or 1 minute to find an entry. And that's just that for me, I don't have energy to go too low on all of those instruments as currencies and all of that. Now, if you go to 1 minute, okay, so that's what it is. So, but you can see the signals to stick on. Look at this signal here. Look at this massive one. Look at this massive one already. So if you are using that, so that means what you only do is that you use a big lot size. So because your stop loss are going to be very, very small, and then so you have to use big lot size. Look at it here. Then so let's say you wait for the confirmation of this candle, and then your stop loss here. That's about how many pips? Just 5 point something. Okay, so 5 point something pips. 1:2 risk reward is fast. Then if you are going to psychological level, I think it's going to be far off. And so 1:2 risk reward, that's about, so let's take it here, for instance, that's about 11 pips. So 11 pips. So if you are trading a standard account and then that's 0.5 is $5. $5 times 11, that's $55. So depending on what's your account size, so you can use that. So within the shortest time, $110 already made, and then you are good to go. And then the same thing, look at this one and all of that. So the market continues. So ladies and gentlemen, there are a whole lot of things we have used now and share with you that trading is very simple if you can pay attention to simple information and illustration we're giving to you. Now, probably somebody will ask me, how much does it take to buy any of those scanner? Each of those scanner costs you $200 per year. And so, yes, $200 per year. So if you calculate it, you know that you are not spending up to $1 per day. That's what it means. Okay. So then if you subscribe, or maybe you are part of Plan B Express Cash Flow Solution Club, then you have it. You have one of them, any of them. And of course, the first recommended we'll give to is the one with psychological level, and then a PBS sniper call. That help a lot, and everybody, and we have testimonial who is simple enough to understand and people can make use of it. So, ladies and gentlemen, so you want to be part of Plan B Express Cash Flow Solution Club, say the number. I will call now, so write it down, +234 90 470 998. I take the number again, +234 90 470 and 998. So take this number, WhatsApp it and say, I am interested. And then we'll give you modality of how to get started, and then we roll together. So this is the fantastic thing. This is aspect of our trading and support tools and all of that. We have not talked about investment. So we still have investment, copy trading that you can maximize your money, and then with no knowledge or not even lifting your fingers. And these are the things we have been teaching and encouraging people to participate in. So my name again is Mida Jimo. I'm the team leader of Plan B Express. So Plan B Express, together we rise. So go to the comment section. You see a link there. You want to register on the broker we're using and the opportunity you have, because if you register with some of the broker we're using, you have a very fantastic discount on all of those subscriptions we're talking about. And of course, more additional support system that are going to help you to succeed in your trading. So please don't joke. Whoever that sent you this video, reach out to them. But if you're watching it on my live on YouTube channel, so just go to the comment section and click, and then say I'm interested, or just register all of those links and then chat up on that WhatsApp number given, and then let's just get you onboarded. Congratulations. Trading is very, very fantastic and easy now, flexible. It's just your ignorance or arrogancy. Sorry if I use that language. That's not to insult anyone, but to just tell you that what can keep us is our ignorance. That is unaware, being unaware of something, arrogant, being thinking that, oh, you know about it, so what, and then what, and all of that. So all of us have that characteristic. So not for one person, as it were. But if we can humble ourselves enough, then it's going to be very fantastic. Are we together, please? So, right, let's go. Congratulations and have a nice time. Bye for now.